So guys, welcome back to our screen. Today we have our second pair, that is EURUSD. And as usual, we're going to start by knowing the trend of the market, top-down analysis, knowing the trend of the market from the high time frame to the lowest time frame. So EURUSD, we have a downtrend market, have a high, a low, a high, a low, a high, an equal low, a high, a low, a high, equal low, a high, a low. We broke here. Now we have come here to put in a lower high on the retracement. We go and put in another lower low here, just the same as on EURUSD. So if you watch the previous video, then you can know that you can draw a trend line from here. Just get the first two touch points where price does not intercept. It will bring you to here. And guys, this is what I was telling you in the previous call, and I'm telling you this, we are going to be having a sell on EURUSD for a long time. If price does not break above here, we are having a sell on EURUSD for a long time. If price does not break above this price level of 1.12198, we are going to have a long sell on EURUSD. So now, why do I say that? It's because you remember the rule we said. On the third touch of the trend line. You remember that? Remember, this is now the first touch. The whole of this area is the first touch. Then we have the whole of this area is the second touch, and this one is the third touch of the trend line, and this is the monthly time frame. So we are expecting EURUSD, if this candle closes as a rejection, we are going to be for a long sell on EURUSD. And I know it sounds ridiculous, but think about it, guys. Calling for a long sell of EURUSD takes high level of analysis, but I can tell you. So let's dive into the analysis. So the trend line is telling us that this is the third touch of the trend line, and it is a bearish trend on EURUSD. So now let's come on just remove the trend line. I always want to have my charts clean and not cluttered with a lot of things. So when we come, we see a downtrend, a market forming lower lows and lower highs. So we had a low here, and we had a high, a lower high, and then we had another lower low. So this one is just a retracement, and the market has been retracing from Wednesday, 1st March 2023 to today. The market has been in this consolidation, and what you have to know about the forex market is, whenever we have a long run or a long downpour like this, there's always going to be a resultant consolidation. You cannot have almost a full 2 years of selling off and then you don't have a consolidation. That is how the market works. There is always a run, a consolidation, a run. What people call a rally, a consolidation, a rally. So there's always going to be a run, a consolidation, a run. So now this was a long run, a long sell on EURUSD. It had to come back and consolidate, gather some liquidity here, and then before it can sell off. So now it has consolidated, so it is retracing to come for a sell off. Now the first thing you do, go to your line chart and observe the highs and lows. Where is the swing high? It is here. Where is the swing low? It is here. To get your Fibonacci, draw from the swing low to the swing high, from the swing high to the swing low. Where is your 50%? It is here. You see the retracement is ranging around 50%, and now it has manipulated into the 60%. We are expecting it to sell off. Sold off here, it came back retracing this area, and it is showing a clear rejection around this area. Guys, there is a trend line at this area. there is a 50% fib this area, and there is also minor support here. There's also minor resistance here. So we are expecting, if this candle, this monthly candle here, closes as a rejection, guys, we are going for a long-term sell. So now that is the monthly time frame. And if you're going for long-term sale, what is our immediate target? Where is going to be our immediate target? Our immediate target is going to be here at the support, this support level here. From here, we shall come here. If we break here, we come here. If we break here, we come here. So EURUSD, for me, it is going to be a long-term sell if we do not break the above support here. However, if we broke here, we are going to come here, which is so unlikely that we are going to break here. You see this rejection? I know it is only 1 week of price action, but the rejection is so high. It is unlikely that we are going to close here. Okay, so now that is the monthly time frame. We know what the monthly time frame is telling us, so we go to the weekly time frame to see what is telling us. So if you come to the weekly time frame, it is clear the first week was a rejection. The second week is also rejecting the same area. The first week was a rejection, second week is rejecting this area. Today is Tuesday, we still have 3 days to go, but it is a big rejection. Make no mistake, this kind of might be here on Tuesday, and then tomorrow, boom, it bumps up to here. However, since this kind of closes as a rejection, chances are high this one also will close as a rejection. But we have to monitor. Remember, we do not predict the forex market, we react to what price is doing. So far, price is telling us that we are bearish or we are dropping. So if you come on the weekly time frame, these are 2 rejections that are showing us. So what do? We go to the daily time frame to get more information. So when you come to the daily time frame, what do you see? It is information that is not clear. If you see well, if you ask me on a daily time frame, something is not clear. However, I can see a daily support here. If you know anything about alchemist, you know that a bullish candle and a bearish candle, they make a resistance. Then a bearish candle and a bullish candle, they make support. So this is a bullish candle and a bearish candle. They make a bullish candle, bearish candle, they make a resistance. And what do you see? There is a rejection of this resistance, a very long rejection on this resistance. That is the yesterday candle. And then we have the today candle, which also went up, and it's also rejecting, which means further confirming our bias of what? Selling. So now we come to the 4 hour to see more detail. What is the 4 hour saying? So the 4 hour, it gave us a 4 hour double top here. We dropped, however, we're still retracing. So what do? You remember what I told you about trend lines for confirmations of entries? Now this is where it comes in. So you'll go to the line chart like that, and then draw a trend line. How do you do the trend line? Connect 2 touch points. The first 2 touch points that we see. There you go. Connect it well. Here. You have it. So after drawing a trend line on the line chart, you come to the candlestick chart to refine the line chart, to define the trend line, to accommodate all the wicks. Why do we accommodate all the wicks? Because guys, make no mistake, this market can come, bump here, and you'll think that the trend line has been broken, and then it will go up to here when you have already entered a sell. Remember, this is the 4 hour time frame. So we shall wait in order for us to confirm our bias on the sales. We shall wait for the 4 hour to break here. When it breaks, we wait for a retest. As long as it retests and shows signs of moving down, that is now when we enter. Before it breaks and retests, we do not enter. No matter how the setup would look juicy, we do not enter, because if you enter there, you would have no confirmation. That is it, guys. So that is how simple it is. So for EURUSD, we are waiting for the 4 hour trend line break and confirmation, but we are also going to keep on monitoring on the daily time frame to see what the daily time frame is actually doing. For now, it shows that it's dropping down, so we shall wait for it to see what is going to do further. But as we see, the market is bearish and we should only be looking for sales. So you see how analysis is simple when you're using this strategy. Top down analysis, very easy. Within 10 minutes you're done, you know the direction of the market. And now what do you have to do? Wait. You just only have to wait and see where the market is going and what is showing you, and you react to what the market is telling you. So that is all for Euro, guys, and then we shall be looking at our next pair tomorrow. You can subscribe if you like the video. If you've learned something, you can subscribe, like, and share such that it can reach more people. Guys, trading is simple. We don't have to make it complicated. Within a minute, you have gotten the trend of the market. You know when to enter, and now you just have to wait for that formation to come. If it doesn't come for the 4 hour, if it doesn't come and cross our trend line to retest and it goes up, we wait for it to come and break here, retest, and then we take it up. Before it does any of the thing, don't do anything. Because guys, look, you can buy here, then it crosses down, stops you out. You can sell here before it crosses the trend line, because this is the second touch of the trend line, and then it goes up here, stops you out. So you have to wait for a break and retest in order for you to confirm. Then you go to the 15 minutes time frame to refine and enter. Okay guys, that is all for today. So we shall wait for tomorrow and analyze another pair on the majors.